Hello everyone, this is Jimmy Singh, broker owner with Supermax Realty. Welcome to my channel, Real Estate Edge with Jimmy Singh. In today's video, I like to talk about Bank of Canada's pending rate announcement tomorrow, that is October the 25th, 2023. So in this short video, I like to discuss certain things that might be weighing on Bank of Canada's governor's rate announcement tomorrow. Friends, as we all know, the primary goal of Bank of Canada is to maintain a stable currency. And they do that by ensuring a stable or low inflation. And historically, the Bank of Canada's goal was to keep inflation around about 2%. And as I've seen, when the inflation rises, it certainly reduces the demand of high ticket items. For example, cars, houses, and eventually this inflation trickles down to the whole market. It impacted the price of daily goods, your groceries, clothing, electronics, everything. And as we all have noticed, especially in last couple of months, global economy is facing lot of challenges and uncertainty. Especially now with the conflict in Middle East, it will impact and certainly can affect or increase inflation. Because historically, wars are inflationary. When there's wars around the world, certain commodity prices, they go up. And if you notice in February of 2022, when Russia attacked Ukraine, commodity prices, energy prices went up. And inflation calculation has a big component of energy inflation built into it. So we might be looking at inflation numbers going up in Canada. A big component might be people are paying more to buy gas or energies. And the good news is in September data, they were saying in Canada, our inflation is down 3.8% from 4% that was in August. And I was reading a recent report by National Bank, and they're saying Canada still have not seen the full impact of rate hikes. And some economists, they believe that it takes roughly 8 full quarters or 2 years for every person in Canada to feel the full effect of those rate hikes. We are already into 18 months. We already have 10 rate hikes, and we will know tomorrow what happens. And the recent data I was browsing, especially this retail data and unemployment, they are pointing towards keeping policy rate at 5% tomorrow. Because softer retail data from August in Canada, they says the Canadians on average, they are feeling the pinch of higher rates. They are cutting back on their spending, and the retails across Canada in August fell down 0.1%. We will have new data in next few weeks. I will share with you. And also I was talking to a gentleman, the car sales, whether it's new or resales, are down because most cars are also sold on financing. And when people buy cars or houses, they look at their monthly carrying cost or the payments. And that actually, these two things might look ridiculous. Even the unemployment rate, it is going up to historical target, which is like 5.5 in Canada. And these things can be positive if I take Bank of Canada's perspective, because they are trying for last couple of quarters to reduce consumer spending and slow down economy. And some economists, they believe in last couple of months, the sharp rise in global bond yields, they are kind of substitute for Bank of Canada not to rate hike, because higher rates are already hampering people's purchasing powers. In particular, as more households renew their mortgages, effect of higher rates is certainly expected to weigh on consumers' mind when they renew the mortgage. And recent data by RBC Bank, Scotia, and TD, they said less than 50% people today are impacted or exposed to higher rates, meaning there's a lot of Canadians whose mortgages are not coming for renewal. They are sitting at fixed rates. They might be renewing in 2024 or 2025. And next year, 2024, on average, 1% of mortgage holders in Canada will be renewing their mortgages. And another thing I like to talk about is the central bank in Canada. They recently did a business owner survey, and they found out most companies, their sentiment is kind of weakened. They are bearish about our economy. They feel the economy is sluggish for next couple of quarters, and they're cutting down on wasteful expenses. They are not investing in business growth, business development, and they are also not very aggressively hiring. So recently, if you heard some news, some of the Canadian banks, they are laying off staff to prepare them for the sluggish economy in next few quarters. And as a real estate active broker owner, I can tell you that housing market across GTA, Toronto, London, Kitchener-Waterloo, all these areas, Windsor, they are kind of freeze. Yes, we are selling properties because people have needs, and some people need to transact irrespective of the economy, irrespective of higher bank qualifying rates, which are hovering around 8.2. Some people need to sell because their life is changing, job relocation, something is happening. But all in all, I can tell it's kind of frozen because people want to transact, they want to buy and sell because higher rates are keeping them staying put. Every week I meet 4 or 5 people. They want to move up to bigger house or downsize. When they look at the higher interest rate, their carrying cost, they want to just wait till the interest rate come down or they see more certainty in economy. So sluggish economy, guys, number one. Second, these recent data which I discussed about retail sales fell in Canada, the job employment issues. I probably feel tomorrow Bank of Canada won't increase the rate hike. But at the same time, if inflation goes up down the line for whatever reason, the Bank of Canada, Mr. Tiff McCallum, he says, he is open to, look into rate hikes again. All in all, they will publish new economy forecast tomorrow morning, that is October 25th at 10 a.m. What do you guys think? Where our housing market is heading? What do you feel about rate hike coming tomorrow, or there's going to be pause, or do you see rate declines or rate cuts in near future? Kindly leave your comments. This is again Jimmy Singh, broker owner with Supermax Realty. If you or your family is looking to buy, sell property anywhere in Greater Toronto area, Golden Horseshoe, Kitchener-Waterloo, Hamilton, London, Chatham, Sarnia, Windsor, give Team Supermax a call. My number is 647-961-2639, or you can call our office at 519-933-2559. Thanks for watching. Talk to you soon.